Hi there, Aaron DeHart here, and I wanted to present this presentation for you that we do that really helps us and helps you navigate the loan process, whether if you're buying a home or you're currently doing a refinance with us. But first and foremost, I want to thank you for working with myself and our wonderful team. We truly love our clients and look at them as family, so it's an honor to be helping you with this. So here's our presentation that we do for understanding the home loan process and navigating through the home buying process. So we're going to go over some things that we're going to cover. And this presentation is about 7-8 minutes long. And the reason I record it is because I want you to be able to go back and use it as a resource if you need to, time and time again. It'll save you a lot of time. It'll help you be more organized. And it'll honestly help the process be a lot more smooth for you and know how to navigate the process. So what we're going to go through in this presentation, I'm going to talk about the home buying fear factors, regulations with the government that we have to deal with now, CFPB, Dodd-Frank, appraisals, and also loan disclosures, what our promises to you are, how your strategy matters more than ever for having a proper pre-approval, and how we communicate with all the agents involved, understanding the loan process, and knowledge is power, how you can help write your contracts when you're making an offer on a house that will get it accepted. And obtaining a home is like an airplane ride. We're going to talk about the different types of turbulence that we can encounter during the home loan process and what we need to do to go about those. We're also going to talk about the do's and the don'ts of the home loan process. This is huge and will save you a ton of headaches, I promise. And who your flight crew is, myself and my team, and what we do and how we're going to communicate with you. And we're going to go over the 4 factors for your loan approval. And then finally, we'll go through the loan process, taking you from all the way from your pre-approval to actually getting your keys in your hand. And then we're going to go over understanding closing cost, what escrow reserve accounts are, your prepaid and your reserves, plus your closing costs, plus your down payment equals what your total due is. We're going to cover closing costs as well. Then we're going to go over understanding rate locks and the different understands, personalized mortgage for you. Not everybody has the same mortgage. And then we're also going to go over understanding mortgage rates and how different types of loans, credit score, different situations actually affect what mortgage rates are. And then finally, we'll do some finances at the end and go over with you. But like I said, take the time to watch this a few different times. It'll really help navigate you through the process. It'll help answer a lot of questions for you. And our goal is to make this as smooth as possible for you and enjoy the ride. So let's get started. First, we're going to go into fear factors. So home buying fear factors. So a lot of people, is there another bubble? And the quick answer to that is no. And the reason being is every single loan that we do nowadays gets triple and quadruple checked for accuracy. We have to prove everything. We have to prove what your income is. We have to prove how much money you have in the bank. Am I going to qualify or not? We're actually going to take you through those steps and make sure that you do qualify and make sure that we're putting you in a home loan that where it's the first of every month, you're actually going to be comfortable making those payments. What your credit score is, how credit affects that. Do I need a down payment or what is my down payment? Is this a good investment? And then also making sure that there's complete transparency. We want to make sure that you understand the entire process, where we're at in the process. So we're very big on our proactive communication with that. So getting a mortgage today, it's tougher than it's ever been. And the reason being is because of the housing crisis that happened in 2005, 2007, and the mortgage meltdown. So now we've got the Dodd-Frank Act, the CFPB, government regulations, and bubble fears. So we've got these big government regulations now involved with the banking and home loan process. And we have to adhere to very tight turn times. So it's very important when we need something back from you, you have to get it back to us within 48 hours, whether it's updated documentation or your initial loan disclosures. Anytime that something's sent to you, we need it back within 48 hours so we can stay in compliance and so we can stay on task to make sure that we're going to close your loan on time. We're also going to talk about appraisals as well. So appraisals are third party. So a lot of times I get asked a question, hey Aaron, what are some third party things that some upfront costs that I can expect? One's the appraisal. Appraisers are an independent third party. They do not work for us. They do not work for the company. They are an independent third party. It's designed that way on purpose. and they have to be paid up front. So a typical cost of appraisal is going to be anywhere from $450 to $600 is typically the norm. If you're getting any kind of inspections or anything like that on the house, those are typically required to be paid for up front as well too. And one movie that I always encourage all my clients to watch that'll really help you understand the process and understand why we have to do things the way we have to do things now. Great movie. It's called The Big Short, but it actually talks about the mortgage meltdown and the housing crisis that our country went through. So here's our promise to you. So I do very proactive communication, my team and I do. So every Tuesday, I literally time block about 2 hours out of my day where all I do is Tuesday update videos to every single one of our clients that we have a loan going on, and also their real estate agents. And then on every Friday, my transaction coordinator sends out an email to everybody going into the weekend so everybody knows where we're at in the process. So you're going to get updated from us twice a day. I pad my closing cost up front on purpose. I'm a hope for the best, plan for the worst kind of guy. And so I purposely pad my closing cost to make sure that what you get at the end is going to be that number or less, or I'll personally pay the difference in it. So your financing strategy matters more than ever. So let's talk about my 5 tips for getting your offer accepted in a hot seller's market. So reputation matters. Check references. You want to be working with not only a good lender, but also a very good agent. Pre-offer, we do a pre-offer intro call and personalized video to the seller and listing agent. So I will actually make a video and tell them how well pre-approved you are and that you have a good loan. We fully credit, income, and asset underwrite all of our borrowers up front. So we actually get your documentation up front, and we actually go through it and make sure that your income is what it is, and we actually make sure that you can qualify for that home loan product. You want to remove any contingencies. You want to prepare. Knowledge is power. And you also want to up your earnest money deposit. If you're really serious about making an offer on that house and you really want that house, you're going to be competing with other people. You might want to up your earnest money as well. And you want to have the ability to do a quick close, ability to close in 21 days or less on most products. Typical normal escrow is going to be about 30 days. Are you ready to fly? So let's talk about types of turbulence we can encounter during the home loan process. So the home loan process is a lot like taking an airplane flight. You could have a delayed flight, lost baggage, booked flight, turbulence from a storm, bad weather, annoying passengers, runway crew, etc. So obtaining a home loan, it's just like you're taking an airplane flight across the country. When you start out on your trip, you'll have no idea how the trip will go, and neither does the pilot. And it's not uncommon that we encounter some turbulence. So here, take the time to read through this, but this is 83 types of turbulence that we could encounter during the home loan process. Conservatively, there's going to be about 50 different people working on your loan, and it's that way by design, and it's to help prevent any type of fraud and to make sure that there's no coercion going on or anything like that. So this just gives some examples of some things that could happen during the loan process. And again, they're just turbulence, but the more we're prepared for them, the better it's going to be and the smoother a ride it'll end up being for us. The do's and don'ts when applying for a home loan. Really simple. Don't give your social security number out to anybody for the next 30 days. And here's why. We're going to triple and quadruple check stuff. So right at the end, they're actually going to check your credit one last time, and they're actually going to call your work to make sure you still have a job or you haven't given notice or anything of that nature. So here's the don'ts. Don't make any major new purchases: car, boat, furniture, jewelry, any new student loans. Those can have an impact on your loan approval. Do not apply for any new credit. If you need to call me and talk about that, let's talk about that, but don't open up any new credit. Don't open up any new accounts, no new gym memberships, anything like that, because they're going to run your credit and it can have an impact on your loan. Do not transfer any balances without letting us know about it first. You want to keep the money in the certain account of how we pre-approved you and how we did it. Don't pay off any collection or accounts past due without first consulting for us. That can actually have a negative impact on your score. Do not close any credit card accounts. Don't change banks or open up new bank accounts. Do not max or overcharge on your credit cards. Do not draw on an open line of credit for closing costs or down payment funds. That's not allowed. Don't consolidate your debt onto another open credit account without consulting us first. Take out a new auto loan or lease. Do not open a new cell phone account. Now the do's. Do continue to make your mortgage and rent payments on time. Do stay current on all existing accounts, even if you're paying them off. Do continue to work for the same employer. Try not to switch jobs or get fired. And do continue to use the same insurance company that you had when you were getting pre-approved. Do continue to live at the same address you're living at currently. Do continue to use your credit card as normal. So if you use a certain credit card to say fill up your gas tank once a week, that's fine. Do everything normal as how you were doing it before. And of course, do call us if you have any questions. We're here to help you. And of course, do tell your friends, coworkers, and family about us. We promise to take great care of them, and referrals are fantastic, and that's how we're able to help other people. So who's your team? So myself, Aaron DeHart, I'm the team leader. I oversee the team. I do mortgage planning and rate lock decisions, and I also do the updates to the real estate agents. My job is to figure out how to structure your loan and how to get it to the finish line for you. Next is Vicki. Vicki's our pre-qualification specialist, and she's also our initial point of contact for the team. She helps gather income, asset, and credit docs for review, and she's a vital part of our team and actually helps me pre-approve and make sure that our clients are pre-approved up front. And then Chrissy Williams. Chrissy is my transaction coordinator and our loan approval specialist. She actually is going to manage your loan from mutual acceptance to closing. And what mutual acceptance is when your offer gets accepted and we're actually in contract on a house. So she manages your file all the way from that time to closing. And she's also going to be your main point of contact after our loan approval for any updates and how to do that. She does an excellent job at that. So let's talk about the 4 factors for loan approval: cash, credit, income, and property. So cash, how much money do we have in the bank, or how much money are we putting down for a down payment if one's required? Credit, what's our credit score and credit history look like? Income, are we making enough money with all of our other debts that we have to pay every month, plus our new proposed mortgage payment? Is there enough income there to safely be able to cover that? And then finally, the property itself. All those other things can be great, but if we're buying a house that every time it rains, you have to move pots and pans around on, it's not going to work. And the 3 phases of the mortgage process. Budgeting, emotional. That's the decision of getting pre-approved and, hey, can we afford this? We're going to make sure that we've got a good budget for you and that the loan that you're going in you can actually afford. Waiting, roller coaster ride. The 30-day escrow period, getting the appraisal back, getting the other things of that back. Finally, closing, planning, getting our final loan approval, and then getting you ready to actually sign and close on your house. So let's go through this is what the loan process actually looks like right here. So if you're watching this, we've already got you pre-approved and we're already doing the application, the issue, and the gathering. And if you're doing a purchase, we found a property as well. So next, this is where we're going to order all the third-party services, such as the appraisal, any inspections. And like I mentioned earlier, those are upfront costs that are typically required to be paid for directly to the servicer, directly to the appraiser, directly to the inspector. Next, we're going to process your file. This is where we actually prepare the loan to go into underwriting, and our loan processor makes the loan look nice and presentable to our underwriter. And next, we're going to go to our underwriter. The best way I like to explain underwriter, it's like going before a judge. And we got to convince the judge that you're innocent and you're not going to have any issues making these mortgage payments and repaying on the mortgage. And the best way to do that is with evidence. And our evidence is your W-2s, your tax returns, your pay stubs, any documentation that we need to get from you. So my biggest thing that I can tell you is surrender the process whenever we need documentation from you. Just get it and get it to us again and as quickly as possible within 48 hours. And what's going to happen pretty much on every loan is we're going to get what's called a conditional loan approval. That means, hey, underwriters approving the loan, but they still need A, B, C, and D. And it's different every time. Sometimes it could be an updated pay stub we need from you or a letter of explanation. Sometimes it has nothing to do with you at all. It can be some third-party stuff that we need to get it to the finish line. Finally, we're going to go and satisfy the conditions that the underwriter requested. Once we have all those signed off, we're going to get what's called a clear to close or our final loan approval. This is the best part of it. Once we get our final loan approval, we're then going to prepare your loan documents to get sent to the title and escrow company. You're not going to sign them at the mortgage company. You sign them at the title and escrow company. And once you get those loan documents closed, then we make arrangements to close on your house. Understanding closing costs. So this is a big question I get a lot of what exactly is closing costs. So I broke it down into two different sections here. And this is just for example purposes here. So we have what's called your escrow reserve accounts. You'll hear those terms escrows or prepaids. And what those are is most loans require escrow accounts for taxes or insurance. So in this example, our monthly homeowner's insurance is $65 and the monthly taxes is $416. Typically, they're going to collect an entire year's worth of homeowner's insurance plus about 3 months. And then for your taxes, they're going to collect anywhere, depending on what time of the year it is, anywhere from about 3 to 6 months for your impound accounts to pay your taxes for you. Then next, you have the other fees involved. You might have some lender fees in there. If the appraisal fee did not get paid up front, but if you'll see here, it says POC, which means paid outside of closing. And again, these are just examples. Credit report, tax service fees, there's going to be title and escrow fees in there. Those are all part of your closing cost. So if you take a look here, the total estimated prepaids were $24.79. And in this example, they're doing a $50,000 down payment, and all the rest of the closing costs were $67.69. So we add those closing costs plus the prepaids for the taxes and insurance, plus the $50,000 down payment. And that's how we come up with the estimated total funds to close. Let's talk about mortgage interest rates. So I subscribe to what's called Rate Watch, and this actually watches the market for me every day. So I'm able to give all my clients advice on whether I think we should float or lock the interest rate in with what's going on in the market currently at that time. And finally, understanding mortgage rates. So you can't believe what you see online. Not all mortgage loans are created the same. So what goes into making a mortgage rate is literally about 30 different things. What's our loan amounts? And this is actually just recently changed. It's 453-100, but anything larger than 453-100 is what is called a jumbo loan. Those have different criteria on them. What type of loan it is? It is a government loan. Is it an FHA, VA, or USDA loan versus a conventional loan? How long is our loan term? 30 years, 15 years. Is it an adjustable rate mortgage versus a fixed loan? What's the purpose? Are we buying a house or are we refinancing a house? Are we taking cash out? All those things increase risk factors and also increase and have an impact on what the adjusters are for the interest rate with that. So take a look at that but that's about 30 different things that actually affect what goes into making mortgage interest rates. So understanding your rate lock. So I always like to give all my clients at least a couple of different options that we can look at, and understanding what's called a discount point. So do we do a discount point or not? So a discount point is where you can actually pay extra money to buy down your interest rate if you want a lower interest rate. And a point is going to be 1% of whatever dollar loan amount you're borrowing. So in this particular example, they're doing a $400,000 loan amount. So 1 point would be $4,000 that they would be required to buy down the interest rate. And finally, we're going to end with financial benefits of owning a home. This example is based on a $350,000 purchase price. And I'll just go through it here. The loan amount is $320,000. They're paying $19,200 in interest. The property taxes are $43.75, and they're in the 30% tax rate, and they have a monthly savings of $590. It also requires you to have what's called forced savings, a monthly principal reduction of $300 every month for buying down the mortgage as we progress through time. And let's say it's a healthy market. 3% is a nice, healthy market for appreciation. So that's $10,500 a year, or $875 a month that you're actually gaining in positive equity. So if we look at our total monthly savings of owning a home, the financial benefits, we have a tax write-off of $590, forced savings of $300, and then appreciation of $875, $1,765 monthly savings a month. So that wraps it up for the home loan process and how our team does things. So the biggest takeaways from this are a lot of government regulations. So anything that we need from you, we need it back within 48 hours to not only stay compliant with government regulations, but to also stay on task and be able to close your loan on time. Number two, surrender to the process. if you just go in and surrender the process and get the documentation that we need and just kind of go with the flow, it's really not that bad of a process. And of course, if you have any questions at all, please feel free to reach out to the team. We're here to help you. And thank you very much for watching. We look forward to serving you. Thank you. Bye-bye.